Good morning, dear student. Myself, Dr. Eva Rani. In this video, I will discuss about the fundamental analysis and its approaches. Welcome to today's episode, where we dive into the world of investing and explore one of the key pillars, that is the fundamental analysis. Whether you are a seasoned investor or just you have started investing, or understanding the fundamentals can be crucial for making informed investment decisions. So if you have started thinking about the investment, you should know what does it mean the fundamental analysis. Let's start with the basics of fundamental analysis. So fundamental analysis is a method of evaluating a security's intrinsic value. How you will come to know the intrinsic value of company? By examining related economic, financial or any other qualitative and quantitative factors. So here we will be look into the fundamental analysis and approaches is talking about that whatever the factors which can influence a company's share price, that factors need to be considered. So it is a method of determining the intrinsic value of a company's security to benefit from its trading. Trading is nothing but to purchase and selling of the securities or stocks or tradable financial assets is known as the trading. When it looks into the factors which can influence the fundamental analysis is macroeconomic factors as well as the microeconomic factors. Macro means which will not be under the control of the company, which will impact entire economy. Maybe it may be related to economic factors, maybe it will be related to industry factors, or it may be related to the market share. So intrinsic value of the company stock, we will be looking into that, and microeconomic factors which will be under the control of the management. So it may be management, it may be the business policies of that particular company, the earning per share of that company, the profit of that particular company. So based on these factors, we can calculate the intrinsic value of a company's stock. Various economic and micro as well as microeconomic factors need to be considered when you are looking for the intrinsic value of a company's stock. Based on this only we will select the stock. So here this is the method fundamental analysis will use to determine the company's stock. It is a method of evaluating value of stocks by analyzing various factors. It also involves in-depth analysis of all possible factors having a bearing on company's profitability and future prospect, and finally it goes to the share price. So it is also you can determine whether stock is undervalued or overvalued, and based on this undervalued or overvalued, investors can make a informed decision they have to purchase that particular company's shares or not. Here we will be looking into the undervalued and intrinsic value is if the intrinsic value is greater than the market price, if the fair market value is higher than the market price, the stock is deemed undervalued, and then you can purchase those shares which is undervalued in nature. Why you need to purchase the undervalued share? So that in future it will give you good return. We are perceiving that if the values of shares is low, the price is low, in future it is going to increase and you can make a good profit from this company's shares. It is exactly opposite when if the fair market value or intrinsic value of that particular company's shares is lower than the market price, the stock will be considered as overvalued, and the recommendation, the advice as per the fundamental analysis, not to buy or sell the stock or that particular company's shares. So here fundamental analysis, all the factors which will influence the company's share price that need to be considered under the fundamental analysis. These are the macroeconomic factors and microeconomic factors. Based on that you can select the company shares, and we can evaluate which company shares is in undervalued in nature and which is overvalued. If the intrinsic value, fair market value is greater than market price, it is undervalued and the advice will be to purchase that particular company shares. But if intrinsic value or the fair value is less than the market price, it is overvalued, or if you have already purchased that company shares, you should sell it. If it is not, then you can refrain, you can stop yourself to purchase that particular company. So here when we will look into the approaches to the fundamental analysis, there are different approaches are there in this. Basically two approaches have been considered, that is the top down approach and bottom up approach.